Hello traders, this is going to be a DAX recap video for Friday, January the 18th, and as usual recaps for Friday I am recording on Saturday. So we were in the range for 7 consecutive days, and you don't know in advance how many days or even weeks a range can last, and this was pretty narrow range for DAX standards, only 200 point wide, and DAX already had an ITR before of this range like 200 points, and it is an unusual thing for DAX to be trapped inside such a narrow range for a long time. So it was a matter of time, break was a matter of time, but we didn't really know when it's going to be. Now you will have always signs of a break, and you can be prepared for that. And even on last Friday I said, even if the breakdown was the dominant scenario and the breakout was the low odds scenario, I was preparing you for both of the scenarios each and every day, and I said early a week before, then everybody and their mother are expecting it to break down, but in the case of breakout, that could be painful for many traders because they are going to be caught on the wrong side, and usually that would mean an emotional liquidation. And breakouts or breakdowns, especially big ones, are an outlier. Those days are rare, and if you are prepared in advance for such a possibility, you can really do well on those kind of days. And what could be the signs of the break? Signs of the break, usual signs of the break, are contracting range. We had that, and that range was lasting for many days, so we knew that the breakout is something that is preparing. Now that breakout can always be a false one, just a poke above and turn below, or it could be a real one. And by preparing each and every day for the possibility of a real break or for a false break, you are prepared to take the action. And we got a breakout. So the signs of a breakout is multiple testing of this resistance above, and less and less time spent between the tests. So this poke was on Thursday evening at the end of the session, and this situation here with the DAX inside the main resistance zone was in the pre-market of Friday session, and this chart was posted before the open. Now for breakout, you will have that contraction of the range, and you will have a series of higher lows. Now let's go to the chart and observe how that went. In the morning notes, I said technically breaking higher is bullish, of course, for US markets that already made a breakout, and that market is now prone to make a breakout attempt. And you would know that. So this was the situation before the open, and you would know that the market is prone to make a breakout because this here was the pre-market range, only this here. And now we can observe that in a chart that the entire pre-market range between these two lines is a pre-market. Let's go to the 5-minute chart now. Between two of these vertical lines is a pre-market session that now lasts almost 8 hours, and in that 8 hours market was inside the 30 points. Now this is additional contracting. Market is already contracted. Market was contracted on Wednesday only 100 points. Then on Thursday it went below that smaller range for a bit, and then stayed here in the upper part of this 200-point range, and then it moved to the final upper floor of this 200-point range. And also from the morning notes, real breakout would mean to see a sustained momentum in the market to go step by step, zone by zone, and 200 and plus point move to the upside. And this final zone that could keep a rally was here, this 245 to 244.65, and that is how the market played this breakout. On that final zone we had a confluence of this channel that was already here on the picture, and we could observe it on the higher time frames. Here is the breakout, here is the tagging of this channel. It is in confluence with one of the resistance zones. So now, if we are ready for the breakout, if we observe that the market is really contracting in the pre-market session, there are two ways how to catch this breakout. First way is get in the long position before the open. So anywhere here with your stop below the zone. As you can see, the entire pre-market session was inside our main resistance zone. This was the first way to enter, and the second way is after the open, buy the first pullback. Now always concentrate and the most attention to the first pullback. So if we are going to take a continuation type trade, we are always going to be concentrating on catching this first pullback. And this was it. At 9, 10, 9, 11, market just tagged the pre-market high and the edge of the resistance zone. As you can see, pre-market high was basically at the same point where the top of the zone is. And when the market makes a real breakout means that we have sustained momentum and also that we have shallow pullbacks. In the case of a breakout, you will not get a decent pullback, like when the market is more in some kind of neutral state, or let's say neutral bearish, neutral bullish. That means that in a neutral bullish environment, it means the market is generally going to be going higher. Then you could always, of course, find some a good location for shorting it, but it is basically a buy the dip market. And when you have a breakout, it is very hard then to go long on a dip, because you won't get a dip. You won't get a dip, and the dips are going to be very shallow. And why is that? Well, because when you see this bigger time picture, swing short sellers are going to have their stops above this resistance zone. Now when the move starts above and the buyers just made this first step, breaking this zone for like 20, 30, 40 points. Nothing is really, decisive here. As you can see, price was here just 25 points above the zone at almost noon. So this first 3 hours of trading was still a bit of a fighting between bulls and bears here. And here in this first couple of hours there was still a possibility that this breakout could maybe be a false one. But as long as the time is going, false breakout would be clear very fast. In the first hour it would be like a poke above, and then Americans like to call it a look above and fail also. Look above and fail means look above resistance and then failing hard to the downside. And this is something that will usually happen very fast upon a breakout attempt. Holding above the breakout level for many hours increases the chance that this is a real breakout, and as long as they're holding here, sellers are getting more nervous and start to closing position, and when price finally moves significantly higher from this resistance here, now stops are getting triggered, and you will get this like phew to the upside. And that is the reason why you won't get a decent pullback, and that is the reason why you should be aggressive when the breakout happens. And many traders get sleepy because the market is going to sing you a lullaby, making you believe that this is some kind of range that will last who knows how many days and so on, and then you lower your guard, and when you're least expecting, poof, they make a breakout or they will make a breakdown. But if you are constantly reading your plan, my morning notes, somebody other people plans, that they are going to remind you, hey, stay alert, because breakout can be today, can be tomorrow, can be the day after tomorrow, but it is going to be sooner or later. In case of very narrow range, that kind of very narrow range usually doesn't last for weeks. It can last for days, and this one did last 7 days, and it was the 8th day. So this was our first entry, this was our second entry, and after this movement here, when they span, look at this here, if we are looking this small balance on a 5-minute chart, then you will observe that it's 1, 2, 3, 4, 5, 6. So half an hour market is spending really near 11k round number. Doesn't touch the zone again. This was for the first pullback. So this here could also be your entry for long with a stop below the zone. Or here, when you observe and you make this rectangle here representing the intraday zone, it is broken and retested. So this is another chance for you, to catch this pullback around 11:35, 11:40. And targets are, as I said in morning notes, the market. If the real breakout is in place, the market is going to go step by step, zone by zone, and to avoid this first zone for fading, because the zone is, in the case of a real breakout, you will expect the range to double. This is the most most simple way to get yourself a target of a breakout. If the market is going to break from a 200-point range, then they, in the case of a real breakout, will make at least 200 points. It doesn't have to be all in the same day, but that is the target of the range that is broken. Just double the range. So if you think like that, then you will not fade these two zones, these first two zones. You will attempt a fade here, or at the both places. So market really just go swoosh through this zone, just breaking it, and targets for this entry, first target is here, second target is at the second zone, third target is on the third zone, and the gap from December 5th 2018 was filled, and this point here is the 200 points from the resistance. And if you were shorting here, I had a long that I partially closed it, and then I partially closed it here also. Then I had another long from this zone. So this here, when you observe that it is coming back, it means that this zone is not going to produce any kind of pullback. It is going back. You could attempt a long here. I had one trade here, and I also tried to short here. So this here, in my opinion, was one of the ideas. You will hear that you don't really want to step in front of the train, but if you are going to fade a strong momentum, then you will look to do that at the points where you think that the market could be exhausted. And it was a break-even trade because market provided me enough time to get out, because all the market did here was basically a bull flag, and you could attempt another long even from here. But it is, market is already exhausted. So this, in the beginning of the session, that was the long opportunities, and after that there was no pullback except for this trade here, from here. And shorting here it was a break-even because market spent 1, 2, 3, 4, 5, 6, half an hour, 6 5-minute candles were there. And really, after, if you are shorting an exhaustion move, and after half an hour nothing is happening, especially if you're shorting exhaustion move that comes out from the breakout, then you should really close your trade, because that usually means that the market isn't done, and they have moved all the way to the final target that was mentioned in this morning notes and in every morning notes since we got into the range as the final target of the breakout move. And if we look at the higher time frames, it is obvious that it is a real breakout, and the bear case now have the only chance for market to go back below 11k. And now when the market is broken this resistance, now imagine how would be, the people are thinking on Monday. The ones that are missed this, they will go long on the first pullback. And now it is it is logical for us when the market is hitting this exhaustion zone and this channel to expect the pullback first, and then to expect the buyers to get in on the first pullback. If you will observe this on daily chart, this is a classic breakout candle, and we are now above daily 50. So there could be in the following days even a pullback to test this zone again and to test daily 50 from the other side. And that's it for me. I wish you a good weekend and a good trading. Of course, from Monday you will get an updated chart that these zones are going to be updated and adjusted for Monday. Thanks for watching, and another video coming soon.